Hello, everybody. How you doing? Good to see everybody. Oh, my glaring again. I'll take that off. So the first piece of good news is I have rigged my webcam to where it's no longer attached to my laptop. So now when I touch my laptop, this video won't bounce. At some point, I'm going to figure out how to get a better laptop so that the video doesn't skip and it works better, generally speaking. But for now, this is all you got. So live with it. Wow, only 23 people are interested in my Dell write-up. I guess BMYRT is over, and now I have the core, hardcore group of followers. Appreciate it. So I'm going to start off really quickly with BMYRT, and there is some good news there. So I know someone that spoke to the trustee, and basically the takeaway from the phone call with the trustee is that whatever funding arrangement is agreed upon by the largest holders, we will all be able to participate on a pro rata basis. And I believe there won't be any minimum number of shares you have to be able to participate. So we could put aside the risk of getting taken advantage of by the largest holders by taking a 20 or 25% take of the litigation proceeds. Outside of that, I don't have too much more to update on. I do think the stock's going to remain delisted, and it's very unlikely to start trading in the future. That shouldn't be an issue when it comes to ultimately getting litigation proceeds. The trustee is working with DTC to make sure that there's a QSIP still, and you will have those shares still in your account, or there'll be a registration, or there'll be a record of them. So that won't be an issue. I think I took some other notes about what he said. Let me see what I got here. Here's some other notes. Okay, I have a little bit more. So the largest holders are going to form a steering committee, and that steering committee is deciding, the big issues of basically what lawyers do we hire. And Phil, why are you texting me in the middle of this video? Sorry about that. Anyway, let me put do not disturb on. My friends are a pain in the butt. So the largest holders are forming a steering committee, and they'll decide all the details of basically what kind of lawyer we get, what the terms of the lawyers are going to be. Because the biggest issue here is making sure that the lawyer and even the trustee is incentivized with us. We don't want them to be paid hourly, because if they're paid hourly with no incentive to get this done quickly or at the highest price, then we'll be sitting here in 2024 and we still won't have a settlement. So they won't get paid for it or anything, and they won't have any, there's no benefit of being on the steering committee outside of being in charge of, this process. He said also that the people that are on the steering committee, and at least the way it worked with Sanofi, is that they will not be restricted. Now, remember, the Sanofi CVR was still trading until the end. So, funds wanted the ability to be able to sell or buy at any time. So they weren't being restricted by information, non-public information from the trustee. In this situation, while the stock is trading in the gray market, and I'm told that no more stock is traded the last 2 days, but there's still a pretty sizable bid at the 45-cent and 50-cent level for stock right now. It's unclear whether or not funds will decide to become restricted, so that they can then influence the trustee in ultimately deciding on what a settlement price should be. Now, this is interesting. I learned a little bit more about how this process will work. So if they get to the point where they want to settle with Bristol Myers, the trustee will sound out as many holders as they can to make sure it's aligned with what the holders want. But of course, they can't speak to everybody. So likely it would be a large minority of holders. Think of it as maybe the top 3, top 4, top 5 funds. So how would this work? So it would be very similar to a fairness hearing in a class action lawsuit. Basically, once the largest holders agree to a price, they then go to a court, and the judge binds this price and this action for everybody in the CVR, so that Bristol Myers does not have to then deal with other litigation from other CVR holders that aren't happy with that price. And this is exactly what happened with the Sanofi situation. And then everybody gets that price. So you don't have to do anything. Somebody asked you, do you have to do anything right now? If you own the CVR, you don't have to do anything. At some point, you might have to sign that you want to be part of the funding agreement, but that's a while from now. And I'll make sure that, you know, I communicate to you guys if I ever know anything more about that. But I'm pretty sure this trustee will put a press release out, and they'll let you know that way as well. I felt very good about the answers from the trustee, and I feel very good about the largest holders here, who are going to be leading the charge. And I think we're in really good hands. And yeah, I think it's good. So they think they'll probably move forward with picking a lawyer no later than, you know, the end of Q1, and maybe even filing a lawsuit. Now, the trustee has not said if they're going to file a lawsuit or not. That would, I guess, be material public information. They decide whether to file a lawsuit, whether it's on the best interest of the CVR holders, and whether or not they think there's a case. If the trustee doesn't think there's a case, he wouldn't file a lawsuit. Now, this is kind of moot at this point. I think it's very likely there will be a lawsuit filed, especially if the holders want to fund it, since the trustee gets paid for this thing to go on as long as it, you know, could go on. So that's pretty much all I got from that. And the next time there is more to update, I will let you know. So the second thing I want to talk about before I get to Dell is I'm now actually going to be pumping something. There's a company called WineAccess, and you can see if you open up my the description for this YouTube, I have a link to a WineAccess referral where you get $50 off your first $150 you spend at WineAccess. Now, I've known about this for months. I have never talked about it on here because I didn't think there was a good enough deal to pump, but they now have a really good deal. So that's why I'm pumping it. There's a wine called Yesterday Reserve that is being sold right now. This will probably only be up there for another day or two. They usually sell these things out pretty quickly. And basically, it's very similar to Dano Goche, which I talked about yesterday, or I mean last week, which is they take excess barrels from very, very high-end vineyards, and they bottle them under their own label, and they charge a fraction of the price. So the Yesterday Cabernet was sold like 4 months ago, and I bought 2 cases of it, and I've had it, and it's great. So I can actually attest to the quality of this wine. But the nice thing about this is that this is the reserve. So in theory, it's even better. And I think they're only charging like $2 or $3 more for it. So you have to spend $150 to get free shipping. And with the 50 off 150 coupon, you probably want to buy 4 bottles, which is like $160, and then you get 50 off. It's $110, and it's free shipping. So you end up paying like $28, $27 a bottle for a bottle of wine that came from a vineyard that puts out $600 bottles of wine. So anyway, I cannot believe I'm doing a commercial right now. But oh, and I get $50. So you get $50 off 150, and then every person that buys it, I get $50 in my account. I did this on Twitter like 6 months ago, and I got like $1,000 out of it. So hey, CVR went to 0. I might as well make some money off of pumping wine. You can find it, like I said, under the description. Just open up the description below the YouTube there, and you can see the link. Make sure you sign up for my link first, and then you go to the link for the wine. Classic wine bump. Yeah, it's pretty funny. Let's see what we got here. Some questions before I go to Dell. Hey, Matt, please email me if when you hear something from Gavin. I'll do likewise. I'm a long-term EMC holder. So I may have a different perspective on Dell and VMware than most. Gavin has never responded to my emails. I still have not spoken to Gavin, but I do know someone that has spoken to him, and I'm not going to follow up with Gavin anytime soon now because I feel very comfortable with the situation and making sure that the minority holders are not going to be in any way harmed by the funding situation. So if I do speak to Gavin, I'll let everybody know. But as of now, that's not the case. As far as Groupon goes, I have nothing to update there. They're probably going to have a terrible Q4 because the whole country's been shut down, and I expect a bad print there. That's not why I own this. Clearly, it has to do with the reopening play and then the turnaround. So it'll be what it's going to be. I'm not concerned there at all. All All right, let's talk Dell, because this is a really interesting idea, and especially for people that don't know a lot about stocks, you can see how I approach this. So I've owned Dell since there used to be a tracking stock for VMware, and when Dell acquired EMC, Dell was a private company, and in order to fund the EMC purchase, they couldn't afford to buy out VMware, so they gave old EMC holders a fraction of the VMware stock that they had, and it traded in a tracking stock. Dell ended up going public by basically robbing that tracking stock, buying it at a fraction of what it was worth to do a backdoor IPO, and then now Dell is a public company. So for those of you that don't know, Dell is controlled by Michael Dell and by Silver Lake. Silver Lake is one of the most successful private equity firms in the country, and Michael Dell is Michael Dell, one of the most successful entrepreneurs in the world. He actually, besides starting Dell, he has literally one of the most successful hedge funds. He doesn't actually run it, but it's MSD Capital, and one of the best track records, manages, I don't even know, 10, $20 billion, and he's extremely successful. So in the past, there's been many times where Michael Dell has, how do I say this politely, not treated public shareholders with the respect that they probably deserved. People thought that he ripped them off when he took Dell private back in 2013. However, the people voted for the deal and agreed to it. So I'll never understand that one. People thought that he took, EMC. He robbed EMC with the EMC VMware deal. Again, that was agreed upon by shareholder vote. And then finally, people thought he was going to rob DVMT, which is the VMware tracking stock. And he did rob DMDT, but again, that was put to a shareholder vote, and the hedge funds that owned it were happy to sell at that price, given the market was in turmoil in the fall of 2018. DVMT litigation is still moving forward, by the way. I didn't even know there was DVMT litigation, so you have to tell me about that, Tim. So anyway, here we are today, and Dell's a public company, and they control 81% of VMware. And Michael Dell and Silver Lake have super voting stock at Dell. They own, between the two of them, Michael Dell and Silver Lake, they own, I think it's like 70% of Dell, and the other 30% is publicly traded, which is basically former VMware DVMT holders, and a lot of the executives have exercised a lot of stock options in the last 2 years, so that's now floated. It's like something like 25% of the float or something. 25% of the shares outstanding are traded at Dell. It was always known that 5 years after the Dell acquisition of EMC, they could spin out VMware. They couldn't do it before then. It wouldn't be tax-free for Dell or Silver Lake or Dell shareholders. Dell said repeatedly that they had no interest in spinning out VMware, and that they had a motto, better together. And nobody thought they were going to spin out VMware. But Dell had always traded at a gigantic discount to the sum of its parts after it went public via DVMT. So to give you an example, up until last summer, you get I'm getting ahead of myself. For every Dell share you have, there's a 0.438 VMware embedded in it. That's the ratio of how many VMware shares you get for every Dell share you own. If you look back to a year ago, and you multiplied VMware's price times 0.438, you were getting the rest of Dell, everything that Dell is, and its debt. It was a negative value, -10, -$20. This despite Dell Core. I'm going to call it Dell Core going forward, everything at Dell that's not VMware. And I'll explain what that is in a little bit. But Dell Core was throwing off, $3, $4 a share in free cash flow a year, minimum. And you were getting paid -$20 to take it. The reason why this is that analysts were doing all sorts of funny games to arrive at a Dell price target the last 2 years. They would take the consolidated EBITDA. They do a few different things, but one analyst might take the consolidated EBITDA of VMware and Dell and put a very low multiple on it, 7, 8 times or something, even though VMware was trading at double digits EBITDA. But many other analysts did a sum of the parts situation where they took the value of the embedded VMware and they did an EV EBITDA for Dell Core, and then they took a 30% or 40% conglomerate discount on it. And this happened all the way ever since the DVMT transaction. Well, that all changed last May when it got leaked on purpose that Dell was exploring spinning off VMware in September 2021. This took me by surprise because it was a year and a half before they could possibly do it. And I didn't think we would hear anything about this until we got much closer to September 2021. I was pretty convinced that once that was leaked, it was definitely going to happen. And between then and September 2021, analysts wouldn't be able to play fun games anymore with conglomerate discounts or some of the parts, because guess what? It'll be two different companies, and math is math, and you can't have a negative value for Dell Core because stocks don't trade negative unless you're, oil futures. So the other thing that analysts get wrong, had been getting wrong here, and they still do to this day, is they don't understand Dell's debt structure, because they include Dell Financial Services debt, which is basically when Dell loans money to people to buy their product, and then there's a receivable that offsets it, which is the product that they loan the money for. As that debt grows, it becomes more profitable to Dell. But analysts were knocking that debt from the enterprise value of Dell, which basically was penalizing them for growing the Dell Financial Services business. It would be like a bank that went from $100 billion in loans to $200 billion in loans, having their enterprise value go up $100 billion more for new debt, even though those loans have an offsetting asset against it. It's asinine. And Dell has been trying for the last year to explain this to the sell side, and they've done a decent job with getting it out there now. That was the first mistake analysts made. The second mistake analysts made, and they're still making today, most of them, is they're valuing Dell Core on an EV/EBITDA basis, which in a lot of cases would mean, not really anymore, but it would mean that the equity value of Dell Core was zero or very, very small, $5, $3, $8, when that never made any sense, because the free cash flow per share is so high, as much as $5 a share in Dell Core free cash flow, that of course that's not worth $5, especially when the net debt wasn't something like 8-9 times debt. It was something like 4 or 5 times net debt. So to sum it up in simple terms, let's say there was 4 times net debt on Dell Core, and they thought the overall business was only worth 5 times EV/EBITDA. That means they thought that the market cap of Dell, which has 770 million shares outstanding, and it throws off something like 7 or 8 billion in EBITDA, was only worth $10 a share or something like that. I think that's what the math. It's just wrong. So I'm going to walk you through the sum of the parts for VMware and Dell, and then I'm going to explain to you what our margin of safety is here. And I'll talk a little bit about the businesses, but honestly, my weakest part is the businesses. These are complex businesses, VMware much more than Dell. And if you don't have a view that VMware is fairly valued or undervalued, then you can't own this. There's really not much of a trade here from a pair perspective. You can make money off of pair trading it, and I'll give you what the math is with that in a second. But I own this just naked. I just own Dell. And I think the best way to own it is just owning the common. I have Leaps, but I put them in a long time ago, and they're very in the money. And I think common is the way to go here. So let's talk about the numbers. I'm going to start with VMware. So VMware did in 2019 $4 billion in cash flow, but there's $1 billion in stock-based comp that I take out. You should always take out stock-based comp from earnings and cash flow, always. It's exactly the same thing as a real cash expense. Don't let any company fool you. If they don't pay them in stock, then they have to pay them in cash. So their adjusted free cash flow was about $3 billion last year, and it's going to grow about 10% this year, something like that. And it might not grow 10% next year because they're in the middle of a business model transition to more of a SaaS model than their legacy business, which is what most bears about VMW don't like, which is, their I don't even know what the hell they do. Kubernetes, container, something. Anyway, the core legacy, it's what is it called? Spheres, vSpheres. The core business is vSpheres, which is basically like on-premise storage, and that's going away to the cloud, like Amazon Cloud. So they're partnering with AWS and all the guys, Google, AWS, but AWS is their biggest partner, and to kind of create a hybrid model where you can be on-premise and off-premise and you do kind of a joint thing. I don't know anything about this stuff. Seriously, nothing. But bears will tell you that business is going away. As a bull, I'll tell you that the top line has been growing about 10% every year. And under the hood, that core business is kind of flat. And the SaaS business and the other businesses are growing, high double digits or even higher than that. So I think that the overall business is fine. And I think that it's hard to value VMware because of this transition that's happening. But anyway, I got carried away there. Let me go back to the numbers. So $3 billion in free cash flow, growing 10% a year, let's say. It's a $57 billion market cap. They have about $4 billion in cash and about $4.5 billion in debt. So we'll call the balance sheet net neutral. So we'll say the enterprise value is about $57 billion at that 3.5 billion of free cash flow. It's trading at something like a high teens, 15, 16, 17, 18 times free cash flow. Now, this is for a cloud-ish software company that has really good EBITDA margins, has like 80% market share in its core business, and as it transitions, should command a multiple much higher than that. Does that take 2 years, 3 years, 4 years? I don't know, but I'm pretty bullish on VMware at this price. Now, something happened yesterday, which is one of the reasons why I decided to do this. VMware had a very sought-after CEO that was everybody liked him. I don't know why I have such a hard time talking today. And he left to join Intel as their CEO. He worked at Intel for 30 years before he joined EMC and then VMware. And I don't look at this at all as bearish on VMware, why he left. The Intel CEO is a dream job. He was there for 30 years. The market cap of Intel is 3 times the market cap of VMware. I'm sure he's going to get a crazy big package that they haven't AK'd yet. And I just don't look at it at all as him being worried about VMware being a sinking ship, and that's why he's going on to a new job. The market obviously didn't like it. VMware was down 8% yesterday, and Dell also was down 8%. I think ultimately you're going to see Dell, Silver Lake and Michael Dell recruit an all-star to lead VMware post this spin, and the stock should rally when they announce the next CEO. I doubt it's someone internally, but what do I know? It seems rather unlikely since they made the CFO interim CEO, and it really won't be him. So if you were going to make, if you were going to choose somebody else there, you would have chose one of the COOs as interim CEO. I think that's a catalyst, but that's why the stock went down yesterday. So today at 0.438 VMware per Dell share, at today's price, you're getting $59 a share in VMware for every share of Dell. Oh, just to be clear, I'm like 99.9% sure they will do this spinoff. So I'm under the working assumption that this is a done deal. They have not announced it yet. They said that they are negotiating with VMware about the terms of the spin, and I'll get to that in the end. But under this assumption of us doing this exercise, the spin's going to happen. It's going to happen in September or October of this year. And as of today's prices, you would get $59 a share in VMware for each share of Dell you own. Dell also owns 90% or 87% or something of SecureWorks, which is another public company. And that's about $1 a share in value. I don't even include that in my sum of the parts because I don't think the market's going to include that. So call that a free dollar that is, there. And at some point they might monetize SecureWorks. What is Dell Core worth? We'll get to what VMware I think is worth in a little bit. But at today's price, if you don't want to have a view that VMware is worth more than it is, we'll say it's worth $59. So Dell Core, consolidated Dell, does about $7 to $8 billion in free cash flow before stock-based comp, $6 to $7 billion after. Most of it's VMware, the stock-based comp. Core Dell only has a couple $100 million a year in stock-based comp. On their Q3 presentation, they said their trailing 12 months for adjusted free cash flow was $8.8 billion, up 15% year over year, driven by strong profitability and diligent working capital management. You got to knock 1.2 billion off that for stock-based comp. That gets you to like 7.6, and then if you take another 3 off for VMware, that gets you to 4.6. A lot of free cash flow. Okay, that's a lot of free cash flow. I think a run rate Dell Core free cash flow number is something more like in the mid 3s. And if you put a 10 times free cash flow multiple on that Dell core free cash flow, that gets you to a $35 billion market cap with 771 million shares outstanding. That's a $45 price on Dell core. So let's put those two together. That's $45 for Dell core, and then that's $59 for VMware. Today alone, you'd have a $104 stock price, assuming VMware doesn't even go up 1 penny from today, versus Dell's stock price at $74, $73. But there are a few more things we have to do before we get to my target price. Dell currently has $31.4 billion of debt and a $4.2 billion VMware margin loan. Its total debt outstanding, not including Dell Financial Services, is $35.6 billion. Okay, I'm not including any of the cash in the balance sheet, which of course you have to, which is as much as $10 billion. It's because the balance sheet is very confusing. It has a lot of account payables. It has a lot of accounts receivables. The account payables are much more than the account receivables. Do you knock them for that? For now, let's just try to stick with the debt number. They said they're going to pay down at least $2.4 billion of debt in Q4. That gets you to $33 billion of debt ending the year. Okay, core Dell does $7 to $8 billion in EBITDA a year, something like that. I think they'll pay down another $3.5 billion this year, which gets you to under $3 billion in debt with the $7 to $8 billion EBITDA number. Okay, that gets you to an EV, and then you also have to include some form of the cash. So whether it's $5 billion or $10 billion, you get net debt down to way below 20, even without the VMware transaction, which I'm going to discuss in a second. My point of this exercise is simple. Dell is going to be at an investment grade balance sheet by the end of this year, even if they don't get a dividend from VMware. So what am I talking about, dividend from VMware? So Dell has said that when they do this spin, they're going to negotiate with VMware to pay a one-time dividend to all VMware shareholders so that they can effectively transfer some debt from Dell, the parent, to VMware, the minority. How would this work? So I assume VMware pays a $15 dividend, which is about a $6.5 billion dividend from VMware. And that $6.5 billion, 20% of it, $1.5 billion, that's not 20%, but just go with me there, just to make it easy. $1.5 billion will go to VMware minority shareholders, so the people that own the VMW stock now, and the other $5 billion will go to Dell Holding Company, the Dell that we currently own now, not Dell shareholders, but to the Dell Holding Company, which will then pay down $5 billion of debt, and then simultaneously we will get a share in New Dell, which will effectively be the same share you own now, and you will get 0.438 shares of VMware. It's important to understand this because if they pay that $15 dividend, VMware is not trading at the price it's trading at today. So you can't say that you have $59 a share in VMW. You actually have less. So I knock off that $15 dividend, which is effectively $6.50 or so in Dell value, because you take $15 times 0.438, and adjusted for that, your value today in VMware stock per Dell share is $53.50. So to get to the appropriate target price today, if you think Dell Core is going to trade at $45, which people think is high, so I'm going to get to more why I think Dell Core is worth $45 in a minute. But if you think Dell Core is worth $45 and you just say VMware is worth today's price, 45 plus 53.50 gets you to very close to $100 a share versus your 73 today. Okay. Why should Dell trade at $45 a share? Well, here's what I think is going to happen in 2022. I'm very bullish on both Dell Core and on VMware. There's a lot of reasons why both of these stocks should work and work really well in 2022. Let's start with Dell. Dell will, for the first time since the LBO, have a clean balance sheet. They will be at investment grade rating and they will be able to return cash to shareholders. They should have no other purpose for the money than to return the cash to shareholders. And it's the only way that Michael Dell and Silver Lake can take money out of this company because they don't want to sell the stock in the open market. If you look at Hewlett Packard, HPE, and HPQ, they're the closest comps you have to a Dell Core. It's kind of hard to find a direct comp at all, but kind of an old, stodgy technology company that's not really growing, that pays out a lot of free cash flow. Both of those companies trade at about 10 times free cash flow. maybe even north of it, 10, 12 times free cash flow. Additionally, Hewlett Packard Enterprises has, net debt. They both pay dividends. I think one has a 3% dividend yield, and I think the other one has a 5% dividend yield. And it's my belief, I have no way to know this, by the way, but it's my belief that Dell will pay a dividend come 2022. I think they know that that's how you get the proper valuation on this thing. It looks like they both have 4% dividend yields, Hewlett Packard and Hewlett Packard, both the HP and HPQ. I believe that they will pay out between a third and a half of their free cash flow in either dividend or in a combination of a dividend and a buyback. I don't even know what they'll do with the other half of the free cash flow. Maybe they'll use it for M&A. There really isn't an understanding of what core Dell would need to buy. But if they pay a dividend and they pay out a dividend of $2 a year, which would just be 40 or 50% of their free cash flow, at a 5% dividend yield, you get to $40 a share. But let's say it doesn't trade at $40 a share day one. Let's say it trades at $30 a share, which I think would be ridiculously cheap. That would be 7 times or 6 or 7 times free cash flow number on an investment grade balance sheet with 2 people that own it, that are owner operators, that are completely aligned with you. So let's be clear, you are aligned with Michael Dell and Silver Lake right now. If you're a VMW minority holder, you are not aligned, but you are very aligned if you are a Dell shareholder. So I believe everything they do at Dell Core and what they do at VMware going forward will all be shareholder-friendly actions. So that's why I think Dell in 2022 is going to be a good stock. From the core, as far as the core business goes, you can do research on that on your own. They've obviously benefited huge from the stay-at-home thing with laptop sales, and they have a few different business lines, and they're kind of natural diversifications off of each other. And the business is fine. It grows at 1, 2, 3% a year, and the bottom line should be stable, if not growing. At mid-single digits kind of thing with the top line. Now, VMware is interesting. VMware is going through a big transition, and their bottom line is stagnant while their top line grows a lot. What happens in 2022 with VMware once this spin is complete? Well, in the past, VMware has not been able to do any large acquisitions or be acquired because it would have been a huge tax bill to the parent company, Dell in this case, or EMC in the previous situation. Huge tax bill, just unheard of. So when Michael Dell and Silver Lake tell you they have no interest in selling VMware and it's not on the table, that's because they couldn't do it. It wasn't possible. They wouldn't have been able to do it for tax purposes. I have, again, no reason to believe this. This is just my own personal opinion. But I think in 2022 or 2023, you will see a huge VMware deal. Either they'll be sold to a very large company and it's in a stock swap, or you'll see VMware buy something in the 5 or 10 or 20, $30 billion range. Who it is, I have no idea, but they couldn't do these things before because Dell had to keep an 81% stock ownership in the company in order for it to be tax-free for Michael Dell and Silver Lake. Once the spin happens, that is no longer the case. They can do anything they want with their stock. I also think VMware is going to re-rate as people see that their transition is working, and you start seeing bottom line growing again. The stock can go much higher. It can go above $200 a share. So I'm very bullish on VMware, despite the CEO leaving yesterday, and I'm very bullish on Dell Core. My actual price targets on a consolidated Dell is much higher than $100. I don't know if that happens, this time next year, but I think it happens, in the next 18 months or 2 years. So what's happening right now with Dell and VMware? How are they negotiating this deal? So Dell has super voting stock in VMware, and Michael Dell and Silver Lake have super voting stock in Dell. It really remains to be seen how this transaction is structured. It's in Michael Dell and Silver Lake's interest to get something in return for giving up their super voting stock. It's my understanding that they could spin the super voting stock out to all Dell shareholders, and we would remain having super voting stock at VMW, and it would be another traded stock, kind of like Google with the 2 Google classes. If they do that, then VMware will not be eligible for the S&P 500. If they decide to give up the super voting stock, then it will be eligible for the S&P 500. Assuming that Dell and Silver Lake's combined ownership of VMware goes below 50% at some point. It would not be below 50% on day one of the spin, but it would be below 50% if they did a sizable M&A deal with stock. If it got added to the S&P 500, clearly that would be a huge tailwind for VMware. And I expect that to happen in the next 2 years. So what would this deal look like? Maybe in return for paying this one-time dividend to Dell and VMware minority, maybe Dell gets a little bit more of a dividend than VMware minority in return for giving up the super voting stock. Super voting stock usually has value, and to relinquish it, you have to get something in return. I have no idea how that's going to work. I just know that Michael Dell and Silver Lake are in charge of both VMware and in charge of Dell, and there's virtually no risk that they don't come to an agreement because they're negotiating with one hand's negotiating with the other. VMware minority might get a vote on the deal, and I would assume anything that happens would be good for VMware minority. VMware minority wants this to happen. VMware will go up if it's no longer tied to Dell, because Dell has been an overhang for years because everybody keeps thinking Michael Dell and Silver Lake are going to screw you. And they thought they were going to acquire the VMware minority and turn Dell into this big conglomerate that just owns one big thing. And that was never going to happen because it was going to destroy value. And Silver Lake and Michael Dell don't want to destroy value. They want to make money. And they have tens of billions of dollars riding on the line here. So spin will happen. When it happens, it will crystallize the value of Dell Core and VMware. It's very, very hard to get to a price point where you're going to lose money here. Basically, at today's prices, even if you use a $30 core Dell and you assume that $650 goes off of it for the VMware one-time dividend, today your value would be $53.50 plus 30 is $83.50 versus the 73 you're at today. So today alone, if you bought this and you put the ARB on and you shorted VMware, you can make nearly 20% in a gross return between now and September if you fully hedged your VMware. Now, if the deal blew up, you'd lose a lot of money because the spread was huge before there was spin news. So that's your risk there. Again, I think that's extraordinarily low. I don't recommend putting on the hedge because I think VMware is extraordinarily distressed right now, and I want to be long VMware. I think I covered everything. Let's go to questions. Still got 38 of you here. DVMT was meant to track VMware. He swapped it for Dell and pocketed the difference. Hopefully the current litigation will bear fruit for prior AMC's DVMT holders. I didn't know there was a shareholder lawsuit still going on with that, Tim. That's great. One of VMW CEOs left for Nutanix. Yes. So they lost their number 2 guy, VMware, about 2 months ago. Again, not good, Bob. You know, losing your top 2 executives in 2 months is bad. But again, that makes sense. The other guy left to, become CEO. He was number 2 before. So I don't look at this as that VMware is a sinking ship. The market obviously didn't like either guy leaving, but it happens. If it happens, VMware will take on a ton of debt, and a long-term agreement will need to be put in place that keeps VMware joined at the hip with Dell. Yeah, I'm not worried about that, Tim. Yes, they will sign a contract to where Dell starts with VMware. I should have mentioned that, though. It's a good point. It's really good news for VMware to not be as tied at the hip with Dell because there's a lot of competitors of Dell that probably hadn't worked that closely with VMware because of Dell's relationship with VMware. When it's more of an independent company, VMware is much more likely to sign more deals with Dell competitors, which could only help VMware. And that's good for Silver Lake and Michael Dell because more of their net worth is tied up in VMware than it is in Dell Core. Tim Hegarty ordered 4 bottles. Thanks a lot, Tim. I appreciate it. It's good wine. I wouldn't pump it otherwise. My opinion, Divvy isn't in the culture of Dell. I envision cash flow being targeted at M&A R&D. You might be right about a large deal in the near future. I think that they know that once they get to investment grade rating, they are going to have all this cash flow, and what are they going to do with it? So, they won't get a good valuation unless they show that the cash flow is going to go back to the owners. I don't think that this ownership group is the same ownership group that Michael Dell had when he was old Dell. He owns so much more of the stock now than he did back then, and Silver Lake's involved now. So I do see a modest dividend. I definitely see the money being spent, on something, not just paying down debt. And I think that's what makes Dell Core revalue. But we'll see. I definitely think Dell Core will be valuable, and I think you will see that work over time. It will not be $40 day one, but I definitely think it could be $30 day one, and I think VMware will be well north of here. So that's why I think you get to the $90 to $100 range in Dell come September, October of this year. Any other questions? Thanks for doing this. Keep up the good work. Thanks, Max. Appreciate it. I think that covers everything. All right. Thanks, everybody. Take care. Happy investing. Sayonara.